We all know that rising concerns are among the most relevant issues related to the economy nowadays. Well, according to a report published by Investors Place on June 8th of this year, as the US shifts into the post-pandemic era, it seems that inflation is an unavoidable buzzword in almost all economic discussions. There are several indicators pointing to the idea that inflation is indeed coming. Now the question is, what type of stocks you should invest in if you want to keep earning money with rising inflation? You will find out in this video. What's up guys, welcome back to Glory Investing Show. In our today's video, I'm going to tell you about how to invest with rising inflation. However, before we go any further, make sure you hit that like button and don't forget to hit that bell icon as well so you never miss any updates. Oh yeah, just to let you guys know, if you would like to buy some awesome trading merch, check out this website. There's a ton of different things you can purchase. You can use the code ADDICT at the checkout if you want to receive a discount. First of all, we have two auto stocks that are Tesla and Ford. One of the major reasons to invest in Tesla and Ford stocks is that these companies have nearly 20% gross margin, which means they can absorb rising costs. It is worth mentioning that Tesla recorded a significant increase in its auto gross margin during the first quarter of this year. Tesla stated in its 2021 first quarter update letter and shareholder deck, while the ASP of our vehicles declined in the first quarter, our auto gross margin increased sequentially as our cost decreased even faster. Reducing the average cost of the vehicles we produce is essential to our mission. In 2017, as we began production of Model 3, our average cost per vehicle across the fleet was $84,000. Due to the launch of new products and new factories and the reduced mix of Model S and Model X, our average cost declined to sub $38,000 per vehicle in the first quarter. This company has always had impressive gross margins for its cars. In January of this year, Quotient Securities analyzed the Model Y and discovered that the gross margin was 29.4%, which is nearly 3 times the industry average that lies at between 8 to 10% for luxury cars. Next we have on our list are the insurance stocks. If you're thinking about why to invest in these stocks, just keep in mind that Oracle of Omaha loves insurance businesses. Investing in insurance stocks is an amazing strategy for long-term gains. Why? Well, this industry has proven itself to be strong and anti-fragile even during a global crisis and uncertainty. This is one of the many reasons why it is the best to buy insurance stocks during inflation. According to a report published by Yahoo Finance on January 25th of this year, perhaps one of the biggest reasons why you should pay attention to insurance stocks is that legendary investor Warren Buffett loves them. The Oracle of Omaha said in a Q&A session with investors that insurance businesses do not need much capital, and they own assets which he'd like to own anyway. He also said that insurance has been the most crucial factor behind Berkshire Hathaway's growth. With that being said, let's move on to our next category of stocks that you should invest in. For those who don't know, a total stock market index fund is basically an investment vehicle that contains a basket of stocks within an ETF or a mutual fund. Investing in a total stock market index fund can help you diversify your portfolio while also reducing the risk of loss. One of the best examples is the Vanguard Total Stock Market Index Admiral shares. According to Investopedia, VTSAX seeks to track the investment results of the CRSP US Total Market Index. It is worth noting that this fund is basically designed to provide you exposure to the entire United States market. You can also go for SPDR or Invesco. You might also want to know that the gross margin in this category is more than 35%. Now, we all know that apparel industry was among the hardest hit areas of the economy last year. In fact, some reports suggest that retail sales at clothing fell nearly 26% from 2019. Now it seems as customer spending on apparel is beginning to rebound. Some of the best apparel stocks are Nike and Revolve. The global gross profit margin of Nike was 43.4% in 2020. Moreover, Revolve Group announced that their gross margin during the first quarter of this year amounted to 51.5%. Semiconductors power a wide range of devices such as industrial machines, cars, smartphones, gaming consoles, etc. While the demand for chips is continuously increasing and the stable demand indicates that you should own at least a few chip stocks. Some of the best chip stocks include Intel, TSMC, and NVIDIA. The revenue of TSMC and its earnings increased 25% and 50% respectively. Moreover, NVIDIA is considered the largest producer of discrete GPUs in the world. You might also want to know that Intel reported recently that it recorded a 56.8% gross margin in 2020. Well, it is even better in NVIDIA's case, whose gross margin amounted to 63.1% during the fourth quarter of 2020. And according to a report published by Focus Taiwan on January 14th of this year, TSMC's gross margin in the fourth quarter of 2020 stood at 54%, up 0.6 percentage points from a quarter earlier, surpassing its projected 51.5% to 53.5%. Last year, the financial sector was among the worst performing S&P 500 group. However, things have changed in 2021 and financials are more than 19% up. In fact, the head of the United States Bank Equity Strategy at RBC Capital Markets, Gerard Cassidy, says that the banking sector is one of the best performing stocks in 2021. Some of the best investment banking options include Morgan Stanley, Goldman Sachs, and Charles Schwab. Goldman's recently reported per-share earnings of $18.6 during the first quarter of 2021. And moreover, a report published by Finbox.com suggests that Goldman Sachs' latest 12-month gross profit margin is 88.8%. Lastly, we have the software stocks with the best gross profit margins. Some of these stocks are Microsoft, Oracle Corporation, Adobe, Salesforce, and Datadog. Although investing in software stocks is generally an excellent strategy, I believe that Microsoft is the best software stock. And the strength of this company comes from its diversification. If you purchase Microsoft stocks, you're actually buying a stake in the core Windows and Office business, the cloud business, gaming, and of course, LinkedIn. According to data provided by Finbox.com, the average gross profit margin of this company was 65.5% between 2016 and 2020. Its gross profit margin peaked at 68.4% in March of this year. And we also have Salesforce.com, which is a cloud-based software company headquartered in California. The gross margin of this company was 73.92% during the first quarter of this year. You need to understand that software is the driving force in powering and increasing dependence on technology nowadays. So it makes sense that investors should consider investing in software stocks if they're looking for solid, long-term gains in the stock market. You might also want to note that Oracle Corporation is also a cloud software company and its gross profit margin is 77.90%. The gross profit margin of Adobe is 85.36%. Well, that will be all for our today's video, and thanks for watching it. If you liked it, make sure to give it a thumbs up and share it with your friends. Also, don't forget to share your thoughts and valuable feedback with us in the comment section below. And while you are here, click to watch one of these 4 videos that are appearing on your screen. We'll see you there. Take care and stay tuned.